Welcome back. You're watching Buy Now Sell Now on ET Now, and time for viewer queries. And for all of those who are actually watching us on the screen right now, do send in your queries via WhatsApp. Our WhatsApp number is 865-797-4571. So you can send your queries on that number as well. So let's get going with our query session for now. And the first query that we've got is from Marshall Fernandez from Kerala, saying that he's a long-term investor. He's holding 26 shares of 3M India, which he's purchased at 20,157 rupees since August last year. So he wants to know, over the longer term, how does 3M India look like? Gaurang, do you track 3M India? Over the longer term, looks solid, makes sense for Marshall to hold on to this counter?
Well, Cheryl, first of all, investors should have courage to get into such companies because, not only 3M India is fundamentally very strong company, but in terms of their business, I don't think any company can come close to 3M India. That's point number one. Point number two, volumes are very scarce as far as BSE and NSE is concerned. In effect, what I'm trying to say is that one should not venture and get into 3M India with a short-term or a medium-term time horizon. And more importantly, Cheryl, when you have investment in companies like 3M India or a Tata Honeywell or a Pfizer or an AstraZeneca or an MRF, just to name a few, unless you need money, you should not sell them. And if everything goes well, just pass it on to the next generation.
Okay, this is a query that we've gotten on WhatsApp all the way from Denmark, and this is Lakshman Sodagam who's asking a question. This one's also for you, Gaurang. This is on Sequent Scientific. He's holding 500 shares at a price of 260, so he's losing a little bit of ground right now, but he can hold for the next couple of years. He's wondering whether to continue or can he average at this price?
Well, so Alex, no specific coverage, so I won't comment on buy, sell and hold. But according to our view, I think the next move that you are likely to see for the Nifty to go to the next level is going to be led by IT, private sector banks and metals and cement. So if this investor does want to have some kind of a shift, then I would suggest to look at large cap in either of these 3 or 4 sectors, because we believe that these 4 sectors are going to be the leading change for the next level on the Sensex and Nifty.
Okay, this one is from Sukanya. She's a senior citizen, but she's saying that she's holding JP Associates, about 2,500 shares, which she's purchased at 19 rupees per share. She is a long-term investor, but wants to know that does it make sense to hold on to this counter? Should she go ahead and sell, or make sense to average? Vaishali, JP Associate, does it make sense for someone to remain invested in this particular counter, and should Sukanya go ahead and sell it or continue to hold it?
I definitely would not suggest such stocks to be counted in for investment, and surely not. Why not, when we have such a big horizon? Why not get into better stocks? So I would say get into Frontline or fundamentally strong, because this is showing no meaning right now to hold at these levels. Just exit and get into a better stock.
All right. The next one is on a counter that has taken quite a bit of a battering, Gaurang, and I'm guessing you may not have coverage on this individual stock, but perhaps you can give some advice nonetheless. K. Parthasarthi, who's a senior citizen from Chennai, has gotten to Sri Renuka Sugars at price of 58. That's an average price. He's asking we should switch to another sugar counter. What would you suggest?
Well, Alex, we had dropped the coverage many years back, and that's a disclosure. Secondly, I think as Vaishali was pointing out for JP Associate, investors should think about their risk appetite first. Secondly, there are reasons why some stocks don't perform despite of the Sensex and Nifty and border markets being at these levels where we are right now. And for thirdly, he is retired. So my humble request is, sir, please get out of these stocks. Sugar sector is prone to news flows from the government, pricing of sugarcane, pricing of sugar, and more importantly, the entire sugar sector is buzzing right now because of the entire ethanol story. but blending of ethanol with petroleum products is going to take some time because of the lack of capacity. So, try to look at, and I always say this, Alex, buy quality, don't buy quantity.
Right, that's the sound advice from Gaurang. Buy quality stocks, but don't look at the quantity. Soumitra wants a fundamental view on Honeywell automation. He wants to know whether it's worth buying at these levels, and if not, then when should he actually look to enter this counter? Gaurang, you briefly touched upon Honeywell automation. But Soumitra wants some in-depth knowledge about it. Does it make sense for him to enter at these levels? And if not, what sort of a level should he look at?
So very niche and marquee business, Cheryl, for Honeywell automation. And as you rightly mentioned, I just referred to this stock when we were talking about 3M. And likewise, there are many other companies which fall into this category. And according to me, Cheryl, this is also one of the counters wherein you don't see large volumes. There are very thin volumes because there is very low floating stock available in the market. And according to me, I think when you're looking at buying companies like Honeywell Automation, 3M India, AstraZeneca, Pfizer, MRF, I don't think you should try to time yourself, because whenever you try to do that, and in fact, whenever you are investing, I don't think you should be timing yourself. You should be looking at the time horizon and how much of time you can give to the market and the investments that you make. With that proposition, I think you start accumulating at current levels, and on all dips, go on accumulating Honeywell automation. And like I mentioned, if time permits you and if you are in no need of money, then pass this to the next generation. I think they will bless you.
Okay, we've got another senior citizen, KV Rao from Hyderabad, who's tuning in. And he's asking about Bajaj Finance and what a ride it has been for this counter. But Vaishali, for somebody who has not gotten in and who's looking to hold for the long term, what kind of entry level would you suggest?
So I would say now that it has surged so high, I think wait for a corrective move somewhere around 7,000 to 6,800 levels would be an ideal level to get into the stock again.
Okay, this one is coming from Shiva. He has 26,500 shares of South Indian Bank, which is purchased at 24 rupees per share. He's saying that he's bought it about 4 years ago. Wants a long-term view. Should I keep holding, average, or sell? Gaurang, South Indian Bank makes continue to hold on to this counter.
So again, a classic case, Cheryl, buying quantity, not looking at the quality. And this is what exactly I was referring to. This gentleman has bought in a huge amount of South Indian Bank 4 years back, and look at the markets 4 years back and where they are right now, and look at this stock where it was 4 years back and where it is right now. No point getting into these kind of stocks, because you end up losing the opportunity of multiplying your wealth. My advice would be to sell ASAP, and if you're looking at smaller private sector banks, then I think one stock that I can recommend is Federal Bank. Or else you can look at large cap private sector banks, starting with HDFC Bank, then going on to Axis, ICICI Bank, Kotak Mahindra Bank, and maybe a mid cap name, something like an IndusInd Bank.
All right. Cheryl, it seems like some of our viewers are hedging their bets and posting queries both on WhatsApp as well as YouTube. I just want to point out that we will only take one stock per viewer. So if you've got a list of stocks, chances are we will give it a miss. This next one is for you, Vaishali. We've got Suhas from Hyderabad, who's sold Airtel at levels of 600. And that was bought at 545. He's asking if it's the right time to re-enter the stock.
Oh, it's already, I mean, people always feel that they have missed out once you see the stock rallying, and it has been rallying since 3 days. So I think wait again for some corrective move, because the risk reward ratio at this level won't be favorable. Of course, going ahead, the target is 720. So lay your bets accordingly, start accumulating, maybe at lower levels. 620 should be the ideal level.
Okay, this one is from Anuradha. She's saying she's interested to invest in Rain Industries or Philip Carbons. Which of this is a good long-term bet? Gaurang, Rain Industries or Philip Carbons, which one should Anuradha look like? Which one looks solid for the longer term?
So I will tell her to avoid, stocks like Rain Industries, Graphite, HEG, even Philip Carbon. I have no clue. We don't have a coverage, Cheryl, but as an alternative investment idea, and the sectors that I was just referring to. So if I have to name two stocks from two different sectors, from private sector bank, I think Axis Bank would be the first choice. And from IT, if I have to pick one, then I would definitely go for the large cap name TCS. So Axis Bank and TCS would be preferred destination instead of buying the other stocks that she has in mind.
Okay, interesting that Gaurang Ponsa points out Axis Bank as a fundamental pick. Incidentally, we've got a question on Axis Bank. This is from Rama Varma, Kerala, and he's holding on, Vaishali, to Axis Bank. I do not know what level he's bought at, but he says that he can take profits. He's wondering whether to take profits and purchase something like an Airtel. Should he do that, or should he hold on to Axis Bank?
Not. Axis is a good stock. It is come into the all-time high territory. So this should be a hold, because going ahead, likewise, as Bank Nifty also has got a lot of scope for an up move. So Axis Bank has to participate to this rally, and I would look at a target of 900, 920. So stay put.
Okay, this one is coming in from Sudeep. He's saying he has 1,200 shares of BEL, which he's purchased at 101 rupees per share. He wants to know whether he should hold on to this for the next 1 to 2 years, or should he start withdrawing it systematically over a period of time at current market price. What's your take on this one, Vaishali? What should Sudeep do with BEL?
So BEL, if you see in the current market scenario, also is holding strong, and it's ready for a new price breakout. So currently it is at 187, and the all-time high has been so far 191. So I think hold on, because this stock is likely to go to 200 to 20 also. So if he is a very strict trader, he should hold it with a trading stop loss, or else just hold for your targets when and.
Okay, this one specifically for you, Gaurang. We've got a viewer, Krish from Chennai, who's aged 57. He says that he's bought PI Industries based on your recommendation at 150 shares, bought at levels of 2,600. And therefore he's making quite a bit of ground right now. He's making money. He's asking if we can add more with a perspective of at least 2 years, and wondering whether price target of 5,000 is achievable.
Greed is always there in the market, Alex. And first of all, I think thanks for taking my advice. 5,000 rupees, well, I can't really say right now, because we've been recommending the stock from sub 2,000 levels, and I think at the levels where it is trading right now, and from the levels where this gentleman has got invested, it's gone up multifold. So instead of chasing, and he's got a decent quantity, Alex, let's face it. So why don't diversify? And when you're diversifying, if one stock or one sector that I can possibly recommend over here is from the FMCG pack, and that's going to be Tata Consumer Products. So instead of allocating large part of your capital to a particular sector or a stock, it is always better to have a diversified portfolio. Hence, continue to hold on PI Industries, but as an alternative investment idea, FMCG sector looks very promising, and given the length and breadth of our country and the population and the consumption theme that grows very well, I think Tata Consumer Product would be a good investment idea.
This one is from Achal Jain, and she's asking a question, I'm sure, which is there in most of our minds. She's saying that she has PVR. She's holding from levels of above 1,847 rupees. She's saying, I bought it in Diwali 2019. It's going to be 2 years this winter. She can continue to hold on for long, but she's really worried about the prospects of theatres. What if people actually don't go out anymore to watch movies in cinema halls? What's your take, Gaurang? This, I'm sure most of us, at least sitting back at home, tend to think, who will go out now to theatres? What will life be going back to cinema halls regularly? Friday first show. So what are the prospects for theatres? Does it make sense to be worried when someone's holding a share of PVR or even Inox Leisure, for the matter of fact?
Well, you and I and people around would think of going to a multiplex only when you have Hollywood and Bollywood releasing movies. And under the current scenario, I think it's going to take a while. And more importantly, sectors like multiplexes, airlines, hospitality, like hotel industries, are extremely vulnerable to any kind of unforeseen development, as you know, with respect to this pandemic is concerned. And we also have the third wave on the horizon. So, and let me give a disclosure, Cheryl, that we are recommending this stock only to investors who have ultra high risk appetite, with a caveat that it can go either ways. So instead of staying invested over here, and like she's worried, I think it is prudent to use rallies to exit the stock, because it'll take quite some time for recovery to happen, and you don't want to spend money on tickets to go and see a movie which you already seen. What I'm trying to say is new releases from Hollywood and Bollywood will take some time, and so will be the footfall in the multiplexes universe. So try to avoid and look at sectors that I've recommended earlier.
Okay, I'm going to come to you, Vaishali, on this next one. We've got Sunny who's asking about a good entry price to start buying SRF, and what a run it's had over the last year or so. It's been absolutely phenomenal. It's been more than a doubler. Would you say that it makes sense to accumulate at this price to start buying?
I would definitely think so, because these stocks actually do not really show the impact when the market starts correcting. So I would say that in stocks like these, like earlier also we mentioned about Honeywell or SRF, I would suggest a SIP way of investing, because every decline would be a good buying opportunity. So I would say, because exact support and bottom cannot be predicted in such stocks, because as I said, that they won't be impacted to that level when market starts correcting. So I would say buy at every decline.
Okay, this one is from Sapna on Mahindra Logistics. She's bought about 100 shares at the price of about 721 rupees per share. She wanted a view on this. So Vaishali, I'll come to you. How does Mahindra Logistics look on the chart? If Sapna wants to look to sell out or average, does it make sense?
I think it hardly has a trend. I would rather say get into Aegis or All Cargo. Mahindra Logistics, I'm not seeing much of any movement right now.
Fair enough. This is in relation to something that you've already spoken about, Gaurang, about diversification. We've got Mangesh. I do not know what the size of his entire portfolio is, and he hasn't mentioned, but he's mentioned that over several years now, over 10 years, he has accumulated 10,000 shares of HDFC Bank, which is a very sizable holding. He's asking if we should diversify at this point to maybe take some profits off the table and put into something else.
So, profits, how much are profits to make and book, Alex, is always a perception of the investor, time horizon and risk appetite. And how much does the investor want from his investment, his or her investments. And if he's bought it over a period of time, first of all, I think congratulations to him. He's got a great pedigree stock and he's gone on accumulating it. He's making fantastic returns. And if he's thinking of diversifying, I think he should do that. But don't sell off larger quantity of this particular investment. Continue to hold a major of it, maybe 25-30% you can think of selling it and diversifying into sectors that I've recommended, keeping large cap in mind, with a disclosure, Alex, that we still recommend HDFC Bank from a long-term point of view. But just because this investor has sizable quantity and a very old investment, I think it is prudent to diversify to some extent.
Okay, this one is coming from Sagar. He wants fundamental view on Rossari Biotech. He got an IPO allotment as well as he added more 500 shares at the level of 750 rupees per share. He wants to know, is it a good company to hold on for the longer term, Gaurang?
I'll give it a pass, Cheryl. We don't have a coverage on this one.
This one, how does Rossari Biotech look on the charts? I know it's a fairly newly listed counter, but any trends that you can make out on this counter?
Much of a data, so it's hard to tell.
Okay, we've got Professor Shivakumar from Bengaluru who's asking about Pidilite, and this one's for you, Vaishali. Would you say that it's a good level to enter at?
So, of course, Pidilite also as a company, it is having a very strong uptrend, and it right now chartically is showing a new round of momentum. So, I would say definitely it's a buy at this level because this stock is likely to come to 26 to 2800 levels in days to come.
Okay, this one is coming in from Manjunath. He's saying he has 478 shares of Canara Bank, which he's purchased at an average price of 426 rupees per share since March 2020 due to amalgamation of Syndicate Bank with Canara Bank. Now the notional loss is about 63%. So he wants to know how can he neutralize this by switching to another counter, a promising stock for the next 1 year. Vaishali, any view on this one? What should Manjunath do with his holding in Canara Bank? Which other stock can he look at?
So I would definitely say either get into a cement stock or get into HDFC Bank or an SBI also would be better to give good returns because Canara will be much lower as compared to HDFC Bank and SBI or ICICI.
This is a question that is coming in from Aditya, and he's asked this question on Monday. He points out, we're taking it now. This is with regard to Clean Science. Is it a good pick, or what is the best pick that you would suggest in the specialty chemical stocks space for the next 5 years?
For me, Alex. Yeah, so we had a coverage on this one from a long-term point of view as in coverage. But other than this, we already spoken about PI Industries, Pidilite. I think Vaishali just referred to. We have a coverage over there. UPL, Aarti Industries, Tata Chemicals. These are some of the ideas from the specialty stroke agrochemical business, and I think this China plus one policy will definitely have a much brighter future for companies established in India, based out of India. Like the names that I've mentioned. So I think it's a great idea to get into these names.
Okay, it's time to hit the rapid fire segment. Gaurang, you're already familiar with this, but Vaishali, I'm going to quickly take you through it. We have about 2 minutes exactly, and we'll try and take as many questions as possible, and we'll try and come to you on an alternative basis. Do give your answer in a very short manner because the goal is to take as many queries as possible. The first one is on Dr. Reddy's laboratory. Gaurang, I'm going to come to you first on this. We've got Thomas George who's got 100 shares at 5,100. Should they hold on right now or should they kind of exit at this point?
So hold and add on dips from a long-term point of view. 5,800, 6,000 could be the target.
This one is from Kunal Kaushik. He wants to know whether he can increase his stake in Motherson Sumi at current price. He already holds about 200 shares, which he's purchased at 160 rupees per share. What's your take, Vaishali?
I would say add now and wait for a target of 260 to 80.
Vaishali, again, Larsen and Toubro coming to you on this one. This is Malikarjuna who's asking about this. He's bought at levels of 1,650. Needs to know whether to hold or sell in the short term.
I think hold. The stock is ready to do 1750 as a trading strategy.
This one is from Dikshita. Wants a view on Chennai Petro Corporation. Does it make sense to invest in this counter, Gaurang?
I think it's a drag basically. Try to avoid stocks which are underperforming and get into FMCG, IT, pharma, private sector banks. I think that's where you will make money.
Vaishali, another large cap, Mahindra & Mahindra is the counter. Elanco is bought at a price of 951. He's got 100 shares. He's asking if we can hold on.
Say add at these levels because there is a near-term hurdle at 830. Once it crosses those levels, we would be looking for higher targets. So it's prudent to add at this level.
This one is from Kaustubh. He wants to know whether he can add Bosch at current levels. If not, what sort of a price should he look at, Vaishali?
So Bosch, I'm also tracking this stock and I'm waiting for this stock to cross 14,050. Once we cross that, we will be seeing a target of 14,750 on near-term basis.
Gaurang, Exide Industries, Ramesh from New Delhi wants to know, he's got 1,000 shares at a price of 183. Can he hold comfortably from the perspective of about 2 years on the fundamentals?
So 245, 265 is the long-term target on this one, and I think this entire EV segment is going to be a great opportunity for battery manufacturing companies to increase their sales and geographical reach.
Alright, with that we come to the end of the rapid fire as well as the query segment. Thank you Gaurang as well as Vaishali for joining us on the show, talking about Maruti as well as telling the viewers what they should do with their investments. And on that note, we'll slip into a break on this edition of Buy Now Sell Now. There's lots lined up for you after this break, so don't go anywhere.